Welcome to the program. Today we're going to talk about what's happening in global financial markets, the Chinese GDP number, Woolworths exiting the Masters business, and we'll talk to you about what you need to do to get your legal affairs in order. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.
We've only got 2 minutes and we're going to cover each topic in no more than 2 minutes. First topic, what's going on in global financial markets at the moment. Pete, good to see some green on the ASX 200 yesterday.
Yeah.
Wall Street was up overnight. It's been a tough start to January, I think the worst on record. Your thoughts on what's going on at the moment?
I think the big problem is, I looked at it only a couple of days ago, if you look at all the good things out there and all the bad things number something like 10. There's 10 bad things, but they're not supersonically bad things. They're all just make you feel negative. On the other hand, the good things are okay, but they're not great enough to offset that kind of negativity.
Okay, so what do you see as the three biggest bad things at the moment?
Well, obviously the oil price, the question marks over China, and the third other thing, Paul, what do you reckon the third thing we'd throw in there? Oh, the commodity price,
iron ore.
Yeah, that kind of thing. You throw all that in, and that's a lot of negativity. But there's a lot of other things on the sidelines, like question marks over, well, the Fed, how fast will they raise interest rates? The growth of the USA. The job numbers are fantastic, but other numbers are looking a little soft. So you throw all this together, and you can see why there's a bit of apprehension. But on the flip side, and also you've got Iran. Iran is now supplying oil.
And North Korea.
And North Korea throwing bombs, H-bombs around. And also throw this one in. Iran is not only adding the oil supply, now they're discounting oil to some European buyers just to cheese the Saudi Arabians off.
So Paul, we sold off pretty hard, obviously, since
we've been about 7.5% down this
6,000. Since the 6,000 number we got to sort of about a year ago. Almost an official bear market territory compared, as some bears would say, or the facts would say. Your thoughts on what's going on right now?
Yeah, look, I think the problem for our market is still by and large commodity prices. I mean, you look at how overseas views our market. First of all, commodity prices are still on the nose. And so if you're an overseas investor, why put your money in Australia? Because the Australian dollar is under pressure. So that's overseas is not buying the Australian market. The local institutions are all sitting back. They can't afford to be long in the resource stocks because
they're all out.
They get killed by the analysts if they or by the investment analysts if they make a mistake. They can't afford to be courageous, and so there's really not a lot of people playing. And I think until we see, iron ore seems to have found maybe a little bit of support here around $40, but we really need to see. Oil, we need to see copper, we need to see a more rounding of that bottom. Some of the supply come off the market. I think our market's going to struggle until we actually see, more confident about commodity prices having found a bit of a bottom.
Even if the US goes up, though, do you think that we'll have problems?
Well, look, that can help. We need the catalyst. I can't see what the local catalyst to drive our market is. I mean, the growth is, the Australian economy is doing okay.
Yeah. Climate numbers are good.
Yeah, there's been some really good data out here. China obviously overhanging the market, but I still think it's fundamentally about commodity prices, and we need to see that bottom, or those bottom, or appear to bottom before our market.
And maybe US earnings might surprise on the high side. If you take the oil companies
Moving
out,
on next topic, that's a good segue you mentioned before on China. Sorry, just trying to keep the agenda here. Chinese GDP. Obviously, China's been a huge concern for what's going on in global financial markets right now. The GDP number came out. Your thoughts on the number, Pete? Well, it's probably in line with expectations.
Of course, my mates in the media had to say the worst growth number in 25 years.
That was how they headlined it, right?
Yeah, right. And next year they'll say the worst growth number in 26 years and 27 years and 28 years because this economy of China is getting bigger and bigger. So it's not going to grow at 10 and 9 and 8% ever again. But Bloomberg and the consensus was around 6.8, 6.9. It came at 6.8. The sell-off that we've seen over the last three weeks or so was based on China being a lot worse than those numbers yesterday, and that's part of the reason why we bounced yesterday. It's not as bad. Of course, some idiots can say, "Oh, you can't trust the numbers." You can't trust any Bureau of Statistic numbers anywhere in the world.
Even
that's right. As long as they keep making the same mistakes, you watch the trend, and China's not as bad as we thought. And then also, I guess, because numbers weren't as strong as some people would like, maybe the Chinese authorities will actually do a bit more stimulus. And that was a part of the reason why the Dow went up straight away, but then did go off the boil for
And
a
Paul,
while.
the Chinese rebalancing story is not new. It's been sort of telegraphed for a long time now.
Yeah,
the numbers are consistent.
Look, there seems to be some strength in the numbers to say the transition away from a manufacturing-led economy to
6.9% was the number.
I mean,
for the whole year.
and lower in the quarter, 1.6% for the quarter. But look, there's some strength to the numbers to say the transition away from a manufacturing economy towards a service economy is sort of picking up momentum. Look, there's some bad numbers in there for Australian, iron ore exporters. I mean, steel production was down. That shouldn't be any surprise. But look, I think China, we don't really. Look, no one really knows whether they can trust the numbers, but the trend is it's slowing, but it seems to be making some progress as it transitions towards a services economy. And ultimately, that's going to be a lot better for Australia than whether the manufacturing base is that strong or not.
Yeah, and Marty, one other thing is...
Because that's where our exports are going to be. Our exports are increasingly to China are going to be, trade-related and service-related as opposed to, things we dig out of the ground.
The reality is on the iron ore number, though. The iron ore numbers are still at record levels. The problem with iron ore, though, is actually the supply.
Yeah,
so we're shipping iron ore to Kingdom Come, but there's just too much of it now.
Yeah, and my hope over the course of this year is some of the small producers in the commodity space will go into business. So BHP and Rio will start doing better. And OPEC might actually eventually come up with a way to get the oil price up as well. And then also, one day the penny's going to drop that the oil price around the world is really low, and that's great for costs and income, and all those companies out there that are benefiting will start showing in their earnings report. I hope that happens this year. If it does, up go stock prices.
Moving on to the next topic, we just got the bell then, it was good timing. Woolworths has made the decision, which a lot of people have been calling for a long time, to exit their struggling Masters business. Paul, I'll throw to you your thoughts.
Yeah, long overdue. I mean, they should have done it earlier. So congratulations to Chairman Gordon Cairns for having the guts to do it.
Made an action early on.
Yeah, but look, the initial market reaction to the Woolworths exit was way overdone. Woolworths is not a buy yet. And let me tell you, this is just one of the 4 problems that Woolworths has. And this is still going to be pretty hard to unwind. Getting out of this business is not going to be easy. But there are 3 other problems. First of all, Woolworths does not yet have a CEO.
It's taken a long time to find one,
the current Grant O'Brien, he announced his resignation in June last year. We're now in January, so that's 7 months into the process. New CEO usually means changes to management structures, and it can,
take some time.
Look, should be good long term, but short term can actually be a bit unsettling to the current team. Problem number 2 for Woolworths is Big W. It's an absolute disaster. Lost sales down about 8.6% last year. It's losing money. Okay, no signs about how Woolworths is going to do.
They have appointed a new CEO, they have.
Yeah, they have. But look, Big W, who knows what it's for? It's not a Kmart, it's not a Target. Who knows what you go to Big W for?
Paul's a bit of a yuppie. He's never been to Big W his whole
I wouldn't
life.
go there. It's got a real branding crisis, right? But the biggest issue for Woolworths is still the supermarket business. The progress.
New entrants.
Yeah, new entrants. Obviously, Aldi. You've got Costco. Maybe Lidl coming to the market, and Coles. Killing it in terms of market share gains.
But I guess, Paul, the fact that they're going to get rid of Masters means that they can concentrate on their strengths, and their strengths in the past have always been their supermarkets, and Dan Murphy's is an absolute ripper. It's the equivalent of Bunnings, isn't it?
Of alcohol.
So, and so you're right, they've got to get a good CEO in there. I suspect part of this decision was probably motivated by the fact that their old CEO's in there advising them now, Roger Corbett, and Roger's probably coming to take this.
Look, it's the right move. Look, don't get me wrong, but this is just, Woolworths is not out of its misery yet. So,
your view is the start of a long journey to clean
it's start of a long
up.
journey. You can't yet call Woolworths back into sort of buy territory.
So when do you buy? 20?
Well,
21?
I think you still hold Westfarmers. This is a great announcement for Westfarmers, right? Make no doubt about it. It happened on the same time as Westfarmers announced a small acquisition in the UK.
Yeah. And what are your thoughts on them going offshore? That can be risky for businesses.
Yeah, it can. I mean, Australian businesses in the UK have by and large been a disaster, but Westfarmers at least, has a reasonably good acquisition history. You've got to say they know something about hardware. So
they have a lot of British executives as well in their business too. McLeod, ex-Coles, was a British exec, so they've got experience in working in those markets.
Yep. So in my Switzer weekend last week, I gave them a bouquet, at least for having a go, I think. And unfortunately, Westfarmers probably, the share price has been hurt a little bit by that acquisition. But by and large, the big winners out of Woolworths exiting Masters is Westfarmers. Great for them. I still think Westfarmers over Woolworths.
Who's the best CEO in the country?
And Woolworths will come into that category at some stage, but it's too early.
Moving on, next topic.
Richard Goyder
for butting in. So In terms of the finance tip for the day, getting your legal affairs in order at the start of the financial year is very important. So we're going to talk about this topic about wills. Ultimately, probably the number one tip I've got there is when it comes to wills is always make sure that you get legal advice. Firstly, when drafting your will, I think you need to be very careful about things like will kits. We live in an incredibly litigious world, and if you misstructure or misappropriate a sentence, you could create issues in regards to your will. Paul, any thoughts on
Yeah,
you?
I think, look, it's start of the year, so obviously a good time just to think about some of these sort of housekeeping type issues. Have you got a will? First of all, your superannuation is different from your estate. So superannuation, you can treat that the way you want to. You should have a binding death benefit nomination. If you're on your own self-managed super fund, make sure it's valid and current. If you're in an industry fund or a retail fund, often they have a 3-year expiry limit on them, so make sure that's up to date as well.
Well, can you run for a minute? A binding death nomination. So it's binding.
Yep.
It's when you die and you nominate who gets your dough. Is that
who gets your dough, and
just for those people who don't understand the language.
And the trustee's required to follow it.
Yeah.
Okay. So the next thing, of course, is have a will, and of course, as you say, look, I don't like will kits. I think it's worth getting.
Unless you've got legal training, you've got to be careful.
But look, you've got to look at things like the estate structure. Think also carefully about powers of attorney, enduring guardianships, all those type of things to get sorted out. It's just that start of the year. I know, look,
And if something in your life's changed, you've had a baby, you've got divorced, you've remarried, you merged a couple of families together, then the chances are you will need to update your will.
Yeah, look, it sounds so basic, but look, I've been one of those people that only last year got my will fixed up, so I have to admit, look, some of us, even though we preach the gospel, we do an act, but a lot of people, stats say, don't have wills, don't have binding death benefit nominations for their super. So start of the year.
It's not really very expensive.
Not that hard to do.
That's all we've got time for, guys. Thanks very much for watching. I'm Marty Switzer.
I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.